Hello, everyone, and welcome to another episode of Passive Income Doctor. And today we're joined by Johnson, who we had on the show a while ago. Welcome back to the show.
Thanks, Dan. Good to see you again.
And for those who might have not heard the first episode, do you want to just give our listeners a brief rundown about, who you are and what you do?
Yeah, so I previously worked as an optometrist and then I transitioned to become a buyer's agent after getting a lot of interest as to, how do I buy property? How do I scale a portfolio? How do I actually get past two, three, four properties? And I jumped ship a couple of years ago, and that was after, getting several mentors and purchasing several properties and, doing the due diligence. And now I just help other people do it, especially health professionals. I think because I came from allied health, a lot of my first few people that I helped were allied health as well. So that's how I started.
Yeah, awesome. I guess we'll kind of, this will be part one of our chat and where we'll kind of talk about how can health professionals grow a portfolio, and then we can also, yeah, talk about what you've been up to personally as well. And then stay tuned, guys, for the next episode where we're going to kind of focus or about renovating. I guess renovation, if in a way, is kind of like a form of development where you can, add value. And I know that's a, very topical discussion. What are the pros and what are the pitfalls to look out for? Um, so today we're going to be talking about growing a portfolio. So any kind of overarching themes or tips you want to give our listeners, like when someone's kind of aiming to grow a portfolio,
Yep.
um, what should they consider? Let's say if you're just starting out brand new.
Okay, so if you're just starting out, I would say it's not as important from the financing side as the property side, but it's still obviously very important. From the property selection side is obviously very important because you want to make sure that the first or the second is a good stepping stone to get to the third, fourth. Um, on the flip side, if you've already got a few properties in your belt, then it really becomes a finance game, making sure you've got a strong team, especially a good mortgage broker who is well versed in, trust lending, SMSF lending, second tiers, third tiers, creative finance to be able to get you that leverage to be able to continue scaling. Because a lot of people I hear when they get stuck, it's more so because the broker said no, the bank said no, or they're just not sure what they can do in the current situation with what they've got. So I think it depends on what stage you're at. In the beginning stages, I think property selection is very crucial. Not to say that it's not crucial later on, but it becomes more of a finance game once you've accumulated a few properties.
Mm. Yep, definitely. I think if you can buy well for your first or first and second, it can really set you up in terms of that equity growth, which you can then use as a deposit for your future purchases. I think another thing is maybe more of a like an investor mindset side. If you're seeing wins from your first property, first and second,
Yeah,
you kind of feel more confident as an investor to keep going, versus I've had some doctors reach out and they're like, yep, 10 years ago, I bought a off the plan unit in Westmead or Parramatta, some high density suburbs in
yeah,
Sydney. And they're like, it's done nothing for 10 years.
yeah.
Some of them are like, oh, I don't know. I think property investing doesn't work for me. It's so I think getting the first couple right is very important.
I think I was actually surprised as to how many of those come across people who have bought something that hasn't performed well and they come saying, should I sell? Should I hold? What should I do? And in those scenarios, it comes down to what can you do without selling. So let's just say, for example, you weren't to sell and your borrowing capacity was free enough to be able to continue purchasing. Now, if it's obviously trending in the right direction, slightly positive every single year, it's not performing extra well, at least it's trending in the right way, then just hold it and
Mm,
keep purchasing, right? Now, obviously, if you're capped and you can't afford to buy, I would first, you know, run scenarios with the broker, see if you were to sell, how much capital does it actually release up. Start planning that one before you actually sell because you don't want to have to sell, have it sitting in your bank and then not do anything.
mm,
You may as well just hold it, right? So I always say, look, unless you have plans to actually execute and move, relocate those funds into a better asset, just leave it for now because it's still, even if it's underperforming, it's still performing better than nothing.
Mm. So I guess we touched on, say, the beginner investor, say you might be intern PGY1, PGY2,
Mm.
um, or yeah, allied health kind of starting out. So kind of asset selection is critical. Now I've also I can, look at my phone. I've got a lot of people saying, oh, hey, I've got, yeah, a couple of properties, let's call it three or four. And then the bank says no.
Yeah,
Or it could be, I had someone say, you know, basically I've taken a break from work or
mhm.
I'm changing roles and, maybe I need to wait 1, 2 years before I invest. And then often I might say to them, just double check that with your broker, double check with the bank, or even
Yeah,
if your broker is not sure, you sometimes even consider changing broker. What would you add to about people who kind
yeah,
of, like they're like, oh, because of, you know, parental leave or because of changing jobs, I think I'm stuck. I'm just gonna wait a few years. What would you say to that?
yeah. I think there's no harm in getting a second opinion. Obviously, this is you should treat property investment as a business. There should be no real hard feelings about something to make your own position a bit better. And so just get a second opinion, and brokers should, most of them won't charge you anything. And so it's a free second opinion to make sure that, you're priced out or you're not able to actually secure it because that opportunity cost, if you leave it 2, 3 years, could be, an extra property or two if you purchase in the right markets. And I feel like if you're, say, PGY 1, 2, well, when I'm helping those people buy, they know their income's going to go up. And so they can afford to sort of stretch themselves a little bit more. Whereas, for example, if you don't think your income's going to be increasing that much anymore, then you have to be really creative. Like, do I be purchasing in trusts and things like that? Because you want to maximize your borrowing as much as possible because that's probably the biggest constraint that people get when they get stuck. I'm not able to get more lending from the banks. Sure, explore second tier, third tier lenders, or explore different options that other brokers might not be as familiar with. Um, but always try to be maximizing your current position as much as you can.
Yeah. And I guess now let's talk a bit about yourself, kind of uh I think last we talked to you had up to, is it 6 properties? Is that correct?
Yeah, so I haven't really been purchasing for myself. I've really just been purchasing on behalf of people the past few months. So I'm currently just holding six, and they're sort of spread um, two in Queensland, two in WA, two in New South Wales. So pretty evenly. Now, if I was to be buying, I would probably be focused on Vic, and I am buying heavily in Vic. And I'm not saying everyone should buy in Vic, but be aware that rental yields, land tax policies might not be as land or favourable. But I think Melbourne as a whole, as well as satellite locations, are very undervalued. So there is a lot of room to grow in Vic, which is why if I was continuing to buy, which I probably will this year, but I've taken a short break, that's probably where I'd be going.
Yeah, nice. Um, and I guess is it kind of like how's the business going? And is it kind of been focusing on growing the business rather than purchasing investment properties?
Yeah, I mean, business has been pretty steady, and it's been pretty good because I have been pretty much all referrals, previous clients referrals. I haven't done any ads at all, so that's pretty good so far. And I guess I like that because it means that I'm doing a decent job at least, and that people are coming back for the second, third, fourth, fifth purchases, and they're happy enough with the service to be able to refer friends. So I would say for this last few months, that's probably what I've been focusing on is making sure that I'm servicing well and growing the business.
Mm,
I probably will be purchasing for myself this year sometime once I do my taxes, but I haven't really looked into that much these last few months.
mm. And how have you found kind of, when you're working as optometrist versus working on your own business, kind of
Yeah,
self-employed? Are you working kind of less hours or more hours or yeah.
definitely more, definitely more. I mean, optometry was pretty chill from one of the allied health. I mean, for GPs and medical health, you probably guys are doing overtime time and things like that. For optometry, it was not like that. Clock up for 5, that's it. My reports do like they take 2 minutes to write. Referrals, same thing, 2 minutes to write. And so that was very, very like hands off as soon as the last patient is seen. Um, for this, wow, it's like you have to do everything. I've handle a team. I have to make sure that the client is, keeping track, making sure that every stage that the client is well aware of what's happening and that, we are doing our due diligence, all the properties we're buying, because, you know, one bad purchase is going to really hurt a small business. So every single purchase I make, I want to make sure that it's 100% that I would personally buy. That's the kind of mentality. And so I haven't yet passed off that job yet. A lot of the other roles, the admin roles, I've already sort of palmed off because otherwise it'd be too much of a headache. But yeah, slowly building, slowly scaling. It's a lot more work than Optom for sure.
Yeah. And I guess also before we came live, we talked about, some indicators of growth. A lot of people say, oh, how do you know a suburb is going to grow? And, there's a lot of, um, without naming names, obviously there's a lot of sources of information and data out there. In your opinion, what are some indicators that, say a suburb is going to grow?
So I always think past performance never really dictates future performance, but it's a good way to look at things in terms of consistency and whether or not it's had very strong runs and then very strong dips as well. And that sort of ties back to how your risk appetite is and what part of the journey you are. So, for example, you're buying the first and second, some of these areas that come up, maybe Darwin and Tasmania and things like that, where, they're hot spots. Does it really fit your risk appetite, especially for your first one or your second one? Also, one thing to consider is cash flow. But if you're talking purely from capital growth point of view, what data sources, I think the main things are make sure the economy is diversified. Especially for your risk appetite. Let's just say you're few properties, you're happy to go a little bit more risk tolerance, then sure, go to those Gladstones and things like that. But in terms of the first couple, try and get something that has, strong population. Like, for example, Bendigo, Ballarat, they've got 120,000 plus population. That's still solid. Um, Geelong is very solid. But keep in mind, rental yields, you don't want it to be too low where you're going to be suffering for a long period of time because these are going to be long-term holds.
Mm,
If the property is costing you 10, 15, 20K, that doesn't seem like much for maybe one, but if you accumulate two, three, four properties, it's going to be hurt. And so I feel like a lot of people um, want the hotspot, but also it depends on, what your position's like, I guess.
yeah. And I guess, for say our listeners who are wanting to do this themselves, without giving too much secret sauce away, like what would you recommend in terms of how to go about, in a time efficient manner to, kind of research
Yep.
and look at the data?
Okay. So how do I TLDR this? What do I actually look for after I find areas that are um, gentrified? I look at supply and demand. It really comes down to that. Look at how much stock is currently for sale, for example, how many listings are for sale, how many percentage of listings, and then days on market, vacancy rates. How much demand is there actually at the moment? Of course, I also look at building approvals, how many stock is coming to the market in the future. Now, I use a whole lot of platforms because these platforms, they draw their own data, and especially with such a big purchase, like 500,000 or more, I like to cross-check across a few different platforms to make sure that, I'm not purely relying on one data source for everything. But some of the factors that I would consider are affordability, so income versus house prices. How affordable is it for the local demographic? You don't want it to be purely investor focused as well. You want a good rented to owner occupier ratio. And then I also look at demand levels. What's in demand? Is it three bedders? Is it four bedders? Is it townhouses? Is it units? At the end of the day, the goal of investing is to make money, but you also have to focus on the end user, right? If you were to sell, if you were to offload this asset, ideally you want to be selling to own occupier because those are the guys going to be paying top dollar. You don't really want to be selling to an investor who's going to be crunching the numbers and whatnot, right? And so also in periods of fluctuation, especially if markets are going to go up and then stagnant and then up and then stagnant, areas where there's a lot of investor activity, if they're sort of forced to sell and things like that, it's going to be much more volatile. So I feel like if you're focusing on, the fundamentals, good schools, good infrastructure, where homeowners want to live, own occupiers, and then also tag on top of that supply and demand, inventory levels, building approvals, stock and market, days in the market, and vacancy rates, all that stuff. You pretty much can't go wrong.
Mm. Some gold nuggets there. And I guess let's finishing up, and it's also for our listeners through Spotify, Apple, etc. If you want to check out the YouTube version to look at some images, feel free to do that as well. Johnson, do you want to kind of show us a bit like a general market update around the country?
Sure. Is my screen sharing?
Yes, I believe.
Let me just reshare.
Reshare.
Cool. So this is, can you see this now?
Maybe double click. Yep, perfect.
Cool. This is Australian property performance in the last 12 months as of 5th of March 2026. So 12 months ago to today. Um, what has areas done? So if we're looking at the left-hand side up to about this mark here, this is houses, and then the right-hand side is units. And then within the houses there are the different areas. So you've got Victoria, Queensland market, WA, South Australia, New South Wales. And then within each Victoria, you've got Greater Melbourne, rest of Vic, and then Greater Sydney, rest of New South Wales, etc. And so the darker areas are the areas that have performed more strongly than the lighter areas in the last 12 months, right? And so if you have a look across the board just for houses, Queensland and WA have still kept very, very strong in the last 12 months. Queensland, Townsville, Mackay, Gladstone really have still been surging. Now, do I think this is too late? I honestly think Gladstone is unusual where it's still churning. I mean, it's I would say much higher risk than something like Townsville. And Townsville is much more diversified market now with a stronger population and a lot going for it in terms of infrastructure. Perth still pumping. I think when I've been talking to people on the ground from Perth, like stock is just so low still, and there's a lot of demand for it, which is not surprising, especially because it's I think it's almost hitting $1 million, right? The median house
Mm,
price.
that's my understanding.
Yeah, yeah. So if you look at what's undervalued, you can see Vic really in the past 12 months, it's starting to pick up, but it's not yet as green as these other areas. And then Sydney, Greater New South Wales, uh, Newcastle, Central Coast, that sort of thing, Wollongong, one of the light areas. On this unit side, I guess if you are targeting units, then Queensland and WA are really focused. It's actually quite interesting when you mentioned Darwin, right? Darwin is actually going quite strong, so 15% in the last 12 months. Um, Goes to show, where are actually people finding there is demand? Because at the end of the day, what creates this price growth is demand exceeding supply, right? With the biggest imbalances showing the largest amount of growths. So, yeah, I would say if you're looking to buy for long-term hold, potentially look at the ones that are up and coming, slightly lighter green. If you're looking for something that needs, immediate equity return, potentially look at more green stuff. But it depends on what part of the journey you are, right? If,
Yeah.
for example, you're starting out and your borrowing capacity is not an issue because you've got pretty strong income and you want equity because you're cash strapped, you know, focus on things that are going to get you faster equity so that you can release and re-go again. If your sort of equity is not a problem, cash is not a problem, your borrowing capacity, focus on things that are going to cash flow better, higher, stronger yields. That's going to buffer your borrowing capacity. Because the aim of the game is really how do you continue to grow? How do you overcome these obstacles? I think that's the biggest issue that I see is people getting stuck. People are like, oh, I have two properties, I've got three properties. Broker said no. Bank said no.
Mm. Yeah, how do you continue to grow? I think that is my take-home message, and I think for many listeners as well. I think it's been a great chat today about an update on how you are going and also as well kind of where you've been purchasing and also kind of where, the next 12 months might hold. I think our listeners will find it very useful. How can listeners find out more about you?
Just follow my Instagram, prime.vantage. I always try to share useful tips. Um, yeah, you can just reach out if you want to do that. But really, at the end of the day, it's just more about education, more about, how do we actually find people who have been there and done that and actually growing people's portfolios. I think the biggest thing is understanding your current position, knowing what's the roadblock. Is it borrowing? Is it equity? What is it? Or is it just time? Some people are really busy. I mean, I met an ortho bro this week and he has no time. And he's like, take the wheel, just help me buy.
Awesome. So thank you, listeners, for tuning into another episode of Passive Income Doctor. See you on the next one.
Thanks, Dan.
All right. So maybe you stop sharing that screen and then, yeah,
I don't know
I
how
think,
helpful that. Hopefully, they will have a look at that picture and take
yeah,
some.
yeah. I think it was sharing. I didn't realize it was probably sharing the whole time, but anyway, that's fine. All
Okay.
right. Now we'll go into part two.
So, do you want to bring up the address, or do you think that's too much?
Um, if that person's given you permission, yeah, I don't mind.
Person has given me permission. The only
Yeah,
reason I bring it up is because it's such a recent deal. Like it's
yeah,
settled literally 30 days ago, right?
yeah, yeah. Okay. All right. Um, so maybe we'll start off not screen sharing, but then I'll give you an um uh, some notice and then we'll sh share it. Okay. So I guess we'll focus now on renovating. Okay.
Renovating. Yeah. So I guess what do you want to just talk about renovation in general, right? First.
Yeah, renovating, when to do it, traps to avoid. Yeah, and then we'll share that study, a case study, and that should be about 20 minutes. Yeah.
Yeah. Okay. No stress. You just leave
All
it.
right. So, hello everyone, and welcome to another episode of Passive Income Doctor. Today we're joined again by Johnson from Prime Vantage, and today we're going to be discussing renovating. Welcome to the show.
Cool. Thanks for having me, Dan. Good to see you again.
Yeah. So yeah, I had a listener kind of reach out and wanted to hear more about renovating. I
Mhm.
myself haven't really done any renovating yet, although I have a bathroom issue that might need a bathroom reno. So I thought I'd reach out, and I know you kind of have experience with renovating. So I guess in the context of an investor, like
Yeah.
who should consider investing? Because I know, from my point of view, if you were very, limited on cash and very time poor, kind of taking on a renovation project, where you have to stump up 50K or whatever, it might not be the most feasible.
Yeah.
Um, what would you say, like who should consider investing? What type of investor?
Who should type it? Who
Oh,
should
who
invest,
should
right?
consider renovating?
Yeah, so it depends on what part of the journey and your position in terms of how much cash you've got available. So let's just say, for example, property investment as a whole, right? You've got passive investors and then you've got more active investors. Passive just being stand by and hold, set and forget, probably one of the um, lowest effort type of investing strategies, which is just buying in good locations and letting the market rise. Now, why would someone renovate? Is obviously to get equity uplift as well as yield uplift as well, and sort of enhance the market growth as well as use the market growth. I would say if you're in the stage where you've got borrowing capacity and you've got a significant amount of cash, then consider continuing buying because I always think that's could outweigh doing a renovation. But let's just say you are borrowing capacity strapped, or you want to revisit your portfolio and you want to sort of revamp it so that you've got better yields to increase your borrowing capacity. Then yes, I feel like having those value add opportunities is very helpful. So there's sort of three main ways, like buy and holds, and then renovate, and then one is value add and the potential in the future. So if you were interested in it but didn't want to do one straight away, I have a lot of people who are buying properties that a little bit older but currently tenantable, and then have potential to do a reno, say 5, 10 years in the future as well.
Okay. So from what I'm hearing, sounds like maybe not so much the first or early stage investor, but maybe someone kind of more after a few properties in kind of thing.
Correct. I mean, when you talk about renovation as well, it comes down to what type of renovation you want to do, right? There's different types of renovation. So I always try and focus on what gives most value. So on an early entry level, what gives most value? Paint, flooring, landscaping, lighting. I feel like that's bare minimum will give you the most uplift. You don't really want to focus on things that aren't going to give you that return. So if you stage a property really well, if you do landscaping really well, and you change the lighting, that's not super expensive to do, and it really will, bring up that appeal, which will boost the value of the property, especially when a value comes around or when you sell the property. Now, the next stage would be, adding an extra room, adding an extra bathroom, or bathroom renovation or kitchen renovation. Now, it is a bit tricky as to, how much these things cost because it depends on the dimensions and that sort of thing. But as a whole, those things definitely add value as long as you're not overspending or overcapitalizing on fixtures and fittings and all that.
Okay. Yeah, so I think bang for buck would be flooring, painting, lighting. So it could be just, outdated light fixtures, changing that. And
Yes.
also I've heard maybe even door handles as well. If it's like a
Yeah.
really old one, can, relatively cheap to fix those. Um, and with flooring, is there anything in particular you suggest, or is it kind of dependent on the suburb and, what the local
Yeah.
demographic property managers would suggest?
Yeah. I think this is very generic advice, but how do I approach it is focus on the end user. It's always the end user, right? If you don't know the area as well, ask property managers because their job is to deal with tenants, and tenants will sort of have more interest in a property because of certain features, right? And they'll see a trend. Do they like carpets? Do they like hybrid flooring? Do they like planks? I don't know. Like it could be dependent on the local area. But I would always have that in mind. Also, a thing is to have a look at sold properties. Have a look at properties that have been renovated and have been sold for the high margin. What finishes did they use? I feel like if one of the issues that I see some people potentially make is they renovate it to their own liking. Now, there's nothing wrong with that to do in your own PPR, but if you're renovating for the purpose of investment to increase the rental yield or the equity, then renovate for the end product, not for yourself.
Yeah. And any tips for organizing one of those, or renovations in general? Like, do you kind of get your property manager to manage it?
Yeah.
Do they often charge an extra fee? Like, what have you found?
For me, it's a bit different because I have trades. I only have trades in Sydney, Melbourne at the moment. So I haven't really done bigger renos in, say, WA. I have done, say, cosmetic paint and flooring just because of trades I've built relationships over the years. But in terms of full scale renos, in terms of bathroom renos and kitchen renos, Sydney, Melbourne is probably the main focus. Now, if you were doing it on your own, you have no trade experience or anything like that, then I'll probably get the property manager to do a few quotes. Get like 3 quotes, see what the consensus is for the bathroom, because that will give you a rough idea as to what you're expecting. Now, as you know, Dan, like quotes can range. It could be 20K, 30K, 40K for a bathroom. I mean, generally speaking, when I'm doing a bathroom, it shouldn't cost anywhere near that. But if you're calling someone else just get a few quotes before you actually go ahead with it for sure.
Yeah, I can share a personal story, which at the moment, one of my properties needs, I think the waterproofing has failed and kind of need a full bathroom renovation. And yeah, 22,000, 30,000, 32,000, 48,000. So it is a wide range. I guess also as well, it depends on um, where in Australia it is. You can imagine if you're a very small rural town where it's very hard to get trades, or trades might need to come in and need accommodation, etc. Like I can imagine the costs could really blow out. And also, I guess it depends on, how good your property manager is, whether they have the time and the willingness to kind of help you with some of these things.
Yeah. So I would probably ask that before because you're most likely thinking about a reno before you even buy it, right? It's unlikely, you buy and then like, oh, maybe I should renovate it. Like you buy with the potential intention of maybe doing a renovation. So I guess when you're shopping around property managers, ask, are they willing to project manage it for you? And are they going to charge a fee? And do they have experience in it? Now,
Mm,
when I do it, it's because we're able to give those trades regular work, which is why we can get it for much cheaper, especially because we're only paying really for, labor is the main differentiator between the 20, 30, 40K, really, right? Materials shouldn't be that much more expensive between trades. And so um, I would say the top three things that I look for when I'm doing renovation through trades is first, quality workmanship, right? How can you vouch that this person's going to do a good job? Because the worst thing is they don't do a good job and then you have to go and fix it again after because they didn't do a good job. And the second thing is cost as well as speed. Because when you're doing a renovation and it's vacant, for example, that's going to really eat into your cost. So doing a renovation, let's just say one takes 2 weeks and another takes 3, 4, 5 weeks. That's 2, 3, 4 weeks extra vacancy that you've missed out on in terms of rental income.
mm. Yeah, that is a good point. It's not just, oh, this one's slightly cheaper, but then if they take twice as long or their work machine is bad, that might end up costing you more.
100%. And so it's sort of a balancing act as to not always going for the cheapest, but making sure that whether or not you're using Google reviews or some other mechanism to vouch for them, that they're going to do it in a timely manner. Can you book them in the next 2 weeks, or they're going to take 2 months to actually book
Mm.
them?
Yeah, I think that's, asking intelligent questions, not just how much, it's like what's actually covered, what does it not cover, you could sometimes read the fine print, one quote might be like, oh yeah, we not going to replace the bathtub, for example, and the other one might be like, oh, it's actually floor to ceiling tiles, while the other one's not. Um,
Yeah.
and Yeah, and also, yeah, I think also attention to detail, like simple things like spelling mistakes on the quotes, or, how quick are they in getting the quote back to you? I think it doesn't bode well if, for example, they're taking weeks or months to even get a simple quote out to you. You wonder how the
Yeah.
communication might be once you start the renovation process.
I
Yeah.
think that's really good. And also, when you're renovating, I think I should bring this up, especially if people are considering to do renovation, is not all renovations make profit. You want to make sure that you're purchasing a property that is going to make you profit. Because if the end of the game is to do a renovation to get the uplift, you want to make sure the margins are in there. And how do you know if the margins are in there? People ask me all of that. How do I find these profits? Like, I'll show you an example later on, Dan, as well. So, um, you look at the disparity between unrenovated and renovated houses. And then you also look at the disparity between three bedders and four bedders. This is all numbers you can look at in line. So if there's a big enough disparity between three bedder and four bedder or unrenovated and renovated, figure out how much is actually going to cost you to do that sort of renovation. How much is it going to cost you in that particular area to do a bathroom, kitchen, reno, or flooring or something like that. Once you have a general idea, because most of the time it's only going to give a take a little percentage of that amount, work out is it feasible because it's a business and you want to make sure that you're not overcapitalizing just because you want to do a renovation.
Mm, mm. Yeah, I can imagine, you could choose a really high-end fixtures, etc. But if your suburb is more mid or lower socioeconomic, it might not actually add that much value. Um, I remember a while ago reading that, maybe a rough rule of thumb is every dollar you spend, you kind of want two or maybe even $3 uplift in value. Is that sound about
Yeah,
right? Or do you have any rough rules of thumb?
I generally use that as well. Not necessarily to the T in terms of like if it doesn't make me to, but it must be worth my time. So the worst case scenario is let's just say you buy a property for $700,000 to do $100,000 renovation, you're all in for $800,000, and then it's worth 800,000. That's the absolute worst case scenario, right? Because then why would you spend all that time and money doing that? So I would say yes, at least 2 to 1, ideally more. But it also depends on how much work you're actually doing, how much effort you're actually putting in. Are you actually coordinating trades, or is this completely passive for you as well? I'm also happy to do a little bit less than 2 to 1 if I'm completely hands-free and someone
Mm,
else is doing it, right? But if I'm going to be project managing, organizing trades, then at the very minimum, 2 to 1.
okay. And I guess, have you had any horror stories of Renault's gone wrong? It might not be yours, but it could be, someone else's.
Right. Not mine personally, but um, I'm sure everyone knows of a big BA who's an advocate as to renovating and adding grade flats. If you look at the valuations that he comes up with, and then look at the comparable sales or even, what's being sold in the area, those numbers don't stack up. So you don't really want to be doing valuations to bump up a fake figure if you really can't sell it for that figure. Does that make sense? So I have seen case studies of another big BA sort of promoting renovations with, desktop valves. When can you really sell it at that price? It's going to be hard, you know,
Mm, mm,
because at the end of the day, desktop valves, yes, you can pull out the equity, great, and you can go again. But, worst case scenario, you want to make sure that you're not overcapitalizing and the renovation is actually going to, pay for itself, you could say.
mm. Yeah, I guess that's a good point, isn't it? If say something happened and you're kind of forced to sell, but
Yes.
then you're kind of selling for way less than you thought, I guess that would be a bit of a nasty surprise.
Yeah.
All right. So we've touched on kind of focusing on, yeah, paint, flooring, landscaping, kind of bang for buck, if you like.
Yeah.
And we also talked about some more advanced, involved where, either project manage it yourself or you can probably hire a project manager or property manager to do it for you.
Yeah.
Um, do you want to finish on by showing us a recent a deal renovation
Yeah.
where you did renovation? And I guess for our listeners who are audio, this, after this, when you get home from driving or whatever, maybe have a check out of this, on YouTube as well, Passive Income Doctor.
Yeah. I'm going to share a case study. Now, before I do that, I think when you're doing a renovation, the key thing is to try and buy under market value as much as possible. Because on the way in, yes, you can save costs on trades and things like that, but that's really going to be, the buffer is if you can already build in that margin, right? If you bought 20, 30, 40, 50K under market value because the house is absolutely trashed or something like that, and obviously the numbers make sense, that's going to save you a whole lot of headaches and just to negotiate against the trades. Because if you negotiate in the trades and you rip them hard, you might get it for absolute best price, but the trade might not actually do a good job because you ripped them for so much money. So I think making sure you get a really good deal in terms of there's a lot of upside potential and that you've got a buffer is probably more important than making sure you get the cheapest possible trade. But yeah, to show you one example, actually. Let's see. Okay, so this is one that we purchased it recently. So let's share my screen again. So this is 12 Harrison Court in Carrum Downs. If people don't know where Carrum Downs is, it's towards the Frankston region in Melbourne. Now, this is an incredibly hot market. Properties are flying off the shelf, being sold within a couple of weeks. And this particular client came to me after actually missing out on a few properties in Carrum Downs at auction. So they went to auction, they missed out on a few, and they found it very tricky to buy. But they did want a property that required works because they wanted to do a renovation. They're not tradies themselves, but they wanted to be in on the action because that's where they saw value. And so this property was an off-market property, and it was quite an unusual case because this person actually was halfway through the renovation and did all the strip out and things like that, but didn't have funds to complete because of personal circumstances. Now, he had really poor personal, I won't go into detail, but it was really unfortunate personal circumstances, and he really needed to sell. And we settled on this 5th of February 2026, which is exactly a month ago. Um, and you can see, like, it's just overgrown and there's just rubbish everywhere. It actually looks way worse on the inside. But I'll show you what it looked like afterwards. And this was, you know, 3-week renovation. Can you see this video here?
Yes.
So pretty straightforward. Landscaping was done, painted the garage door, and then when we go inside as well, like the fixtures and fittings of the door, as well as the flooring was done, and then a good coat of paint really does wonders.
Yeah, flooring painting. Yeah, makes it more modern.
for sure. So when the value goes in, which he will go in this week. Now we did already get bank valuation, but we want a full valuation because I think the bank valuation came in slightly short, even though it was a great result. And we'll talk about the results in a moment. But you can see here that they did an awesome job. So this renovation took 3 weeks. It only cost them 25 grand because that was pretty much mostly materials. And they did hire some trades, but mostly was done by themselves in this big shed here. But numbers of this deal, this was purchased, settled a month ago, purchased for 699, so just under 700. It is a house on a block of land in a quiet street. They did a $25,000 renovation, and the valuation is at 820. Now we're actually going to be doing a full valuation because based on the market and what I've been seeing sold in that area, mid to high eights would be quite good. So that's what we're targeting. It'd be even better if they hit nine, but 699, 25K renovation, 3 weeks later getting it revat at 820, I wouldn't be complaining.
Mm. So I guess playing devil's advocate, if you didn't renovate, so say
Yeah.
purchase, under market value, so it would
Yep.
be, so you still have uplift, kind of purchase it for 700 and maybe now be worth, I don't know, 740 or something like that. But then basically put in an extra 25K plus 3 weeks of, I'm sure, hard work.
Yep.
I guess maybe if you didn't, you outsource the labor as well, maybe, I don't know, would you say 50K maybe?
Yeah. So let's just say the labor cost was twice as much as the material costs. So, 25 plus another 50K would be 75 total. That would make it, 775. You're still getting another 50K uplift on that. That's, if it was to cost twice as much. Most of the time, they would charge you, say, 50% would be labor, 50% would be materials. But I'm being like super conservative. You were just completely hands off,
Mm,
then yeah, something like that. And
mm,
so when I saw this deal and it was off market and there was a distressed seller, there was a lot of juice in the tank, and so therefore this is one we went ahead. And so if there isn't enough juice in the tank, I wouldn't really stress too much about how can I negotiate the traders as low as possible. Try and see if you can really get in for a good price because that's going to give you so much more breathing room when you're actually coming to renovate.
yeah. Okay. So it was let's say unrenovated markets move, let's say 740, but
Yep.
with the renovated, maybe the bank value might be like 880, 870, something like that.
Once it's renovated, I'm expecting mid to high eights. So it's
Yeah.
currently tenanted at 650, which is
Yeah.
pretty strong.
Yeah. Okay. So 860. So yeah, basically, let's say spent 50K if you were not doing the labor yourself,
Yes.
and then it's gone up an extra 120K. Yeah. So there you go. That's the rule of thumb, kind of more than um more than doubled the initial investment. Yep. Yep. Stacks
So
up.
this is just one of the most recent cases. I would say that's a good rule of thumb if
Yeah.
you're wanting to renovate.
Yeah. Perfect. Yeah, I think our listeners will find this very interesting for sure. And yeah, an extra way to add equity, I'm sure. And what's their plan? Is it kind of to get equity and go again, or?
Yeah. So interesting enough, this was their second property that they renovated, and so they're looking for the third. So they have three properties. First one was buy and hold. Second, like I said, for renovation strategy, I think starting off that, unless you have trade experience, unless you're, handy yourself and know what to do, it probably wouldn't be the best way to start off. So they did the second one was Reno, third one was Reno, which was this one, and we're starting to look for the next one already.
Okay. All right. So for me, I think take home messages is, consider reno, especially when you maybe a little bit more experienced and need that uplift, or maybe, yeah, you might have some trade contacts and can
Yeah.
get labor cheaper. Rough rule of thumb, every dollar you put in, at least get $2 uplift. And also, yeah, I think just, vet the trades very well. I'm sure everyone's heard some horror stories of renos or trades going wrong. But yeah, I guess if you have a
Tips
team,
as well. Just while I've got this here, while I don't forget it, If someone's actually looking to take a loan out and it's unrenovated and it's in really poor condition, they might actually hit some roadblocks. Some banks might not lend to them, and it might be tricky to get rental appraisal letters because the property management might not write, say, rental appraisal of this much because it's unrenovated. So they probably word it as if, rental appraisal is at 600 post renovation. And some banks might not take that. So for this particular case, they initially got pre-approval with ANZ, and ANZ actually turned them down because of that scenario. And so they had to go to CBA, and then CBA accepted that. So just make sure you get a savvy broker and make sure that they're aware of what your plans are, because there can be some trip ups
Mm.
with lending to places that are not livable or not nice.
Yeah. Yeah, definitely. Awesome. Anything else you wanted to add to finish this episode off, Johnson?
I would say if you are looking to renovate, it's a great strategy to boost your current portfolio. Whether or not that's before you intend to do it, like you purchase it with the intention to renovate, or you've already purchased a few properties and you want to revamp the portfolio again, just make sure you don't overcapitalize and make sure that you are looking at comparable sales, making sure that there is a margin in there to actually do the renovation. Because, yeah, the point of the renovation is to make money.
Yeah. And finally, how can people get in contact with you or find out more about what you can do?
Yeah. I think the easiest way is Instagram, prime.vantage. I try and give as helpful tips as possible. So if you DM me with questions, I'll try and answer it with some videos.
Awesome. Thank you, Johnson, for coming on to another episode of Passive Income Doctor. Thank you to our listeners as well. I hope you found this very useful, especially if you have any people in your life that are considering investing, considering renovating. Forward this episode onto them. Subscribe, leave a 5-star review, and help more people find out about this show. Until next time.
Thanks, Dan.